Good afternoon, ladies and gentlemen, and welcome to the EKF Diagnostic Holdings PLC half-year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just simply type in your question at any time and press send. The company may not be in a position to answer every question received during today's meeting. However, the company review all questions submitted today and publish responses where it's appropriate to do so, and we'll notify you when they're ready for your review. Before we begin, we'd like to submit the following poll, and if you give that your kind attention, I'm sure that'd be warmly welcomed by the company. I'd now like to hand over to CEO Mike Salter. Good afternoon, sir.
Thank you, Mark. Good afternoon, everybody, and welcome to our interim results presentation. For those who don't know myself and Mark, we'll start by going through a brief introduction. So, Mike Salter, I'm the CEO. I joined EKF in 2017, so been here now. After that, I was 33 years with GE Healthcare and Amersham, so been a long time in the life science and diagnostic industry in a variety of senior roles from operations to sales, business development, etc. And I just hand you over to Mark.
Good afternoon, everyone. My name is Mark Davis. I'm the Chief Financial Officer of EKF. I joined the business in early 2022, coming in at a very interesting time. Prior to joining EKF, I was the CFO of a private medical devices company. And before that, I've got experience as an advisor focused around corporate finance.
Thanks, Mark. So let's start by giving a high-level overview of the results and the business. So H1 financial performance. 37.5 million in revenues and adjusted EBITDA of 9.7 million. If you compare this to the pre-COVID 2019 business, this represents a 73% increase in revenue and adjusted EBITDA. Attractive gross margins maintained of 47%. This is very positive considering inflationary challenges that we've had throughout the year so far. Net cash generation of £19.1 million. Positive cash flows from core operations, and all the investment that we've done so far in the company has been funded by internal cash generation. If we look at the established core business then, 11.5% growth in non-COVID H1 sales as compared to last year. Point of care and central lab growth versus the pre-pandemic 2019 levels, a 7.3% growth. So we've not only got back to the levels of revenue for our core business that we had in 2019, we've actually exceeded those levels. So that's a very pleasing result. With the razor and razor blade model, we have high margin consumables driven by an installed base. The life science opportunities driven by existing customers and further investment, which we will go through later in the presentation. And the core business is really profitable and cash generative. If we look at where we play in the attractive markets, established businesses in global growth markets, we have a global distribution network that spans all the regions in the world and good growth in the US, Europe, and Asia. And these markets are continuing to show good growth. For the life science business, there's a strong demand for GMP grade enzyme fermentation. And again, we'll talk about the life science business as we move forward in the presentation. With our lab testing business that we acquired last year in October, the demand there is really driven by a value add offering that we have, a service offering, where we're going to be turning around results within 24 to 48 hours, which is going to be very competitive against our competition in this market, who take 10 to 14 days. So we're really going to build on this value add. And with our contract manufacturing business, which we're going to talk about, we're seeing increasing demand for outsourcing. And this is due to companies that are very good with R&D, but just don't want to invest in manufacturing capabilities. If we look at growth prospects then, we're seeing continued growth in point of care and central lab, really leveraging here our global distribution network. Life sciences, we invested 10 million last year, and we're going to see that capacity come online at the end of this year, and we're looking forward to continued growth in this business in 23 and 24. And we're seeing good transition to non-COVID manufacturing, non-COVID in contract manufacturing and lab testing. So overall, we have a strong core business that's cash generative and profitable, and a growth strategy that we are confident we will deliver significant revenue in 23 and 24. And I have to just make a note that we are not reliant on any COVID business for future growth. Okay, so let's look at the business where it is today as regards to where it was pre-COVID. So let's have a look what EKF does now. So pre-COVID, we were really a point of care medical device company. We positioned ourselves now as a products and services provider for the diagnostic market. And let me explain that. On the left-hand side with point of care and central laboratory, this is our product portfolio. This is the pre-COVID business that those of you who've been following EKF know well. This is the portfolio of analyzers and consumables for hematology and diabetes. And we have central laboratory where we have our reagents for lab-based testing, our ClinChem reagent portfolio, and our benchtop analyzers and centrifuges. In the middle, we have our life science business. This really comes under products and services. And why is that? This is because we make products that go into so we make enzymes that go into our own products. We make the enzyme for BHB that goes into our BHB reagents, but we also manufacture products for third parties. So we're going to take life science as a standalone P&L, as a standalone business. And on the
Ladies and gentlemen, just to bear with us 1 second. Thank you. Ladies and gentlemen, do bear with us just while we reconnect Mike. We've just lost connectivity just momentarily. Thank you.
Hello, Mark. Can you hear me now?
Yeah, I can hear you, Mike. We've got you, Mark. We've got you up on your computer. So thank you very much indeed. Apologies to those online, but hopefully we can now continue.
Mark, can you hear me?
Yes, we can, sir.
I'm sorry about that, folks. Not sure, a bit of a technical hitch there.
Do not worry, sir. Please carry on.
Okay, so we go to the services now, and the contribution of the services business to the 2022 H1 revenues of 10.7 million, just over 28%. When we move forward with the business into 23 and 24, we're going to see this balance of revenue change. We're going to see major growth out of life sciences and out of the services business. And as we move towards 24, you're going to see more of a balance of a 50% of services and 50% of products. That's how we envisage the business moving forward. Okay. If you just look at our global footprint then, and this is just giving you an idea of where we play, where our manufacturing sites are, where our global facilities are. For instance, manufacturing sites, we have 6 globally. We have 3 in the US, 2 in Indiana, where we have our enzyme manufacturing, 1 in Bernie, Texas, which we produce a lot of the ClinChem reagents and our devices for the blood bank and plasma industry. Newly formed facility in Wales, in Penarth, that came online during COVID, which will be doing contract manufacturing moving forward. And then we have 2 facilities in Germany, 1 in Leipzig, which manufactures our point-of-care lactate device, and then in Barleben, which manufactures all our point-of-care devices for hematology and diabetes. If you look at the analyzers that we have in the market, we've got a very large install base in the market. We have over 80,000 analyzers in the market. And with this razor blade model, we are pulling through around 80 million tests a year. And a lot of these are very, very high margin tests. And we actually play in over 120 countries. If we look at the revenue split by location then, for 2021, UK was about 10% of the total revenue, US about 50%, Germany 37%, and Russia 3%. And we do have a legal entity in Russia. We have a subsidiary in Russia. We have 16 people in Russia. And at the moment, we are continuing to do business in that region, but we are keeping an eye on sanctions. So this just gives you an idea of EKF's global footprint and where we actually manufacture our products. I'm going to hand you over to Mark now to do a deep dive financial review of H1.
Thank you, Mike. So I now have the opportunity to take you through the financial performance of the business in the first half in 2022. So on this slide, you can see the key financial highlights of our first half performance, and I will take you through each one in turn and provide a bit more colour around the performance. So our revenue for the first half was 37.5 million. This compares and is a small drop to the 38.6 million in 2021. That drop is largely driven as a result of the reduction in contract manufacturing COVID-related activity. However, what it does hide is the strong growth in the established core parts of our business. And by that, I'm defining our point of care business, our central lab business, and our life science business. And in a couple of slides' time, I will focus on those in more detail. But within the established core part of our business, we saw strong revenue growth of 11.5% compared to the equivalent period in 21. Gross profit was 17.7 million compared to 18.5 million, and gross margin percentage was maintained at around 47%, which is pleasing considering the macro inflationary pressures that we, along as other businesses, are currently experiencing. As you would expect, it is a key management focus to maintain the gross margin percentage, and we have a number of initiatives ongoing, including looking at forward sourcing requirements, and also implementing price increases where appropriate to mitigate the impact of increased input costs. Turning to the adjusted EBITDA, we've delivered 9.7 million versus 12.8 million in 21. The majority of the reduction comes from the drop off in contract manufacturing, similar to when I explained revenue. Within this adjusted EBITDA, we have excluded restructuring costs related to the transition of certain business activities as we pivot the business in 2022 for further growth in 23. And in the appendix of this presentation, there's further details of those costs. Profit before tax, 4.1 versus 11.4 in 2021. Within profit before tax, there is the inclusion of these one-off costs that I referred to. And it's also worth remembering that in 2021, it benefited from a large share-based payment credit. Looking at net cash, and I will go into more detail around cash usage a couple of slides on, we finished the half at £19.1 million versus 20.8 in the equivalent period in 21. And this is after a significant amount of non-trade cash usage, which I will explain in more detail. Net cash generated from operating activities was 8.4 million versus 1.1 in 2021. 2021 was low as a result of working capital increases in order to prepare the business for increased contract manufacturing. And that has been normalized in 22 as we move away from COVID activity. Within the net cash generated is the inventory cash payment that we announced in June of 4.5 million relating to US inventory. And this represents a near clean break of our COVID business with our US customer. I will now go through each of the 5 business units and explain the performance in the first half of the year. So point of care first, which delivered 13.8 million of revenue, up 9.7% on the equivalent period in 21. I have a slide in the next on the next page which shows the performance compared to the pre-pandemic world of 2019. However, the growth that we've seen this year gives the board further confidence. Not only have we seen a full recovery as a result of the COVID downturn, but we are now experiencing growth in markets and within our customers and within our product ranges. The growth that we've seen in point of care goes throughout the product ranges, and I've highlighted here 2 particularly pleasing product ranges: Hemocontrol that grew by 45% and Biosen that grew by an impressive 31%. Central Lab was 6.3 million for the period, and this was flat compared to the 6 month of 21. However, towards the end of this half, the business was impacted by temporary supply chain availability, which was rectified in July. So I think a more accurate representation of the performance of Central Lab is to look at the 7-month performance to July. And if we compare the 7 months to July in 22 versus 21, you see an increase of 13.5% year on year compared to 21. There's a strategy within Central Lab to diversify the product offering. You'll be aware of our strong performing BHB range. We believe it's important to diversify Central Lab, and it's pleasing to see that our glycated albumin range increased by 139% compared to the equivalent period in 21. Life Sciences had a strong performance, bringing in 2 million of revenue, and this is up 96% compared to 21. This revenue increase was driven by key customer activity that we're seeing within the business, and this is a really good sign for the additional capacity in Life Sciences that we will be bringing online in early 2023. Lab testing delivered 2.1 million without an equivalent result for 2021, given that we acquired the ADL business in October 2021. This revenue has been COVID related, and the focus in the second half of the first half of the year has been about diversifying the business to focus on non-COVID activities, and we will be bringing on new and diversified tests, which we are expecting to see revenue being delivered in the second half of 2022. It's a similar story in relation to contract manufacturing, where we saw a drop-off in COVID activity towards the end of Q1, and again, a focus on pivoting that business to a non-COVID activity platform. So contract manufacturing delivered 8.6 million, which was down 51%, as we alluded to during our previous results presentation. Contract manufacturing, we've scaled back the direct overhead base relating to contract manufacturing. So the contract manufacturing that we have left looks very different to what we had last year, and has been scaled back accordingly and ready to be built up as and when the non-COVID business establishes itself. I mentioned the strong established core performance, which grew by 11.5%. And I'm now going to go into some more detail comparing the performance in these business areas to 2019. And I think this is an important measure to look at to show the progress of the established core business over the last few years. Point of care is up 3.2% higher than the pre-pandemic level. And within point of care, the core key ranges of diabetes and hematology have both shown growth, which, as I mentioned earlier, gives us confidence. Not only have they recovered following the downturn during the pandemic, but we're seeing growth within our markets and products. We're also bringing new products online, which we are hoping is going to provide further fuel to the continued growth in this business segment. Central Lab is up 8% versus the equivalent period in 2019. And as I mentioned earlier, it's probably more accurate to review the 7-month performance to July for Central Labs. And if you were to do that, you would see an improvement of around 20% versus the equivalent period of 2019. Central Lab is underpinned by our successful BHB offering, and that has benefited in recent years as a result of private label agreements with our large distribution partners. Finally, Life Sciences is up 43.6% versus 2019. And from the chart, you can see that this is largely due to the performance that we've had in 2022. I believe the performance and the increase that we've seen in 2022 is as a result of the greater focus and investment that we've made into this important growth area, and I think shows the experience and the relationships that Mike brings to the EKF business. And again, this is a very strong sign as we bring on significantly increased capacity into Life Sciences in the new South Bend facility that will come online at the beginning of 2023. Finally, on financial performance, I'm going to review the cash flow of the business in the first half. So we started the half with cash of 20.3 million, and we ended with 19.1. Taking you through the activity within our cash flow, we had strong cash generation, excluding taxation, of 10.4 million in the 6 months, and this includes the US inventory payment that I referred to before. We had 6.8 million of cash used in external investments and the share buyback that was concluded in April. This successful share buyback reversed the dilution that shareholders suffered as a result of the ADL acquisition in October 2021. As a board, we have reviewed our capital allocation policy, and we believe that there is significant opportunity through investment into our organic business, and that will be the focus of our investment strategy moving forward. So we're not expecting any further external investments to be made in 2022 and probably 2023, subject to market conditions. Looking ahead to the second half of the year, I'm expecting to see significant CapEx being spent, and this includes activity within Life Sciences and the South Bend facility. So as the fermenters are being delivered, that triggers certain payment obligations. Also, as a business, we have diversified the investment that we've made, and we've invested in our core German business with a focus on point of care, and also within our UK manufacturing capabilities as well. Within our German business, we are increasing the capacity. We're also looking at operational efficiencies and ways of bringing certain production processes in-house. And again, that will have the benefit of margin enhancement, going back to my point around focus on maintaining gross margin. There's a small benefit as a result of inventory reductions, and this is due to the normalization of the business's working capital as we come out of the recession. There's a 1.6 million increase in cash coming from foreign exchange. Around 50% of our business is denominated in US dollar. So in the last 6 months, we have benefited from the weakness in sterling, and around or just under 50% of the cash that we hold is also within US dollars. Of the cash that we hold, 2.6 million is held within our Russian subsidiary, and there are currently challenges in relation to dividending that value out because of the restrictions on dividends to foreign companies. Worth remembering that as and when that dividend occurs, we own 60% of our Russian subsidiary, so it would be 60% that we will receive. And then finally, on cash, there is a £5.6 million dividend scheduled in at the end of this year in December, and that relates to the 2021 financial results and is the dividend that was approved during the last AGM in May. Thank you, Mike.
All right, thanks, Mark. So now we're going to go into the performance and growth opportunities by business segment. So let's look at point of care first, and let's look at business drivers. So there's a definite need for rapid results at point of care with high quality, robust, and easy to use products. There's also the demand for improving patient outcomes across a wide range of disease. And EKF is in a very fortunate position of having a diverse portfolio throughout, which covers diabetes and hematology. And we have, and we're seen as a trusted partner with an established customer base, but not only an established customer base, an established distributor base as well. We're seeing expansion with new doctors' offices and clinics opening up, especially in the US. And we're also seeing as well, because of diversity of our portfolio, companies really want to work with us because we're just not a one-stop shop for diabetes. For instance, we offer a wide range of products. The last point on this slide, which is really interesting, some companies seen as a challenge, we also see it as an opportunity as well. It's the new IVDR regulations that are coming in. So we're already working with notified bodies in this area, and we've identified the products that we want to move forward with. We also have expertise in this area. So we see this as a potential window of opportunity, as other companies may find this too expensive and difficult to move into. If we look at performance then, H1 revenues in point of care up 9.7% versus 2021 and up 3.2% versus 2019. So full recovery plus growth, as I mentioned earlier. Double-digit growth in diabetes and hematology. Diabetes up 18%, hematology up 10.5%. And biosin at 31%, and that's due to growth in EMEA and APAC. Hema control at 45% is really driven by government anemia programs coming online, especially in Latin America and in Africa. And from a performance perspective, this business is really profitable and cash generative. If we look at growth prospects then, we aren't going to develop everything in-house. So we are investing in R&D internally for new products in point of care, but we're also collaborating with companies who have a strong R&D presence, who are very good at developing new point of care devices, but just don't have the distribution and commercial reach. And we're talking to a number of companies at this time to bring new products into point of care where we don't have to acquire them, we just need to partner with them as a distribution partner. We're expanding our platform system by using latest internal technology. One of the areas where we are adding value now to our existing mature portfolio is with EKF Link. So that's basically a software enhancement that we can add to our devices, which basically allows us to manage data more effectively. So you can store more data, you can transmit data to hospital limb systems, and we're actually seeing how this is really competitive. Last year, we won 2 state tenders based on having this extra data capability. We're seeing geographic expansion in Sweden, Nigeria, Uganda, Kenya, and Ethiopia. A lot of it driven by anemia programs and by increasing demand for diabetes testing. So this is quite an interesting slide I put in here. And this is to try and bring EKF to life for all of you and just really explain where our products are used and the type of products. So we talked about our robust products. So I think this is just a great example of how robust our products are. So these are photographs from Peru. This is working with one of our largest distributors in Latin America, Diagnostica Peruana, and this is to do with fighting anemia. This is to do with government programs of basically improving the lives of hundreds of thousands of women and children. And as you can see in the middle there, there's one of our devices with a lady on the back of a donkey. And if you think about it, if this doesn't prove that our products are robust, actually traveling up mountains on a donkey, then nothing will. So, you know, just a good example of where our products are being used and how robust they are. So let's move to central laboratory then. So in central laboratory, we do have our own analyzer, our benchtop analyzer. We have a range of reagents. We also have reagents that are totally platform agnostic, such as BHB and glycated albumin. And we are the market leader for BHB, but bringing on glycated albumin, which is a short-term monitoring reagent really for diabetes, 2 to 3 week monitoring, and this business is really growing. Unfortunately, we tried to launch this business in 2019, just before COVID, so we didn't have much traction at that stage. But this product now is really building, and it's grown over 100% as regards to 2019 and as regards to last year. So a great portfolio of products there, and the performance, as you can see, is if we look at BHB, it remains strong, up nearly 10% for the first 7 months. And why we've said 7 months as regards to 6 months is that we've had some sourcing challenges in regards to bottles, etc. And a lot of a large amount of revenue rolled over from June into July. So if we take the first 7 months, we can see the growth there. H1 revenues are in line with 2021. As I mentioned as well, with glycated albumin up 139% in relation to H1 last year. So what are the growth prospects then really in central laboratory? One of the areas where we've seen a lot of growth is working with our large distributor network and doing private label products. And why have we done this? So when distributors take on a private label product, their sales force is incentivized to sell the product. So when the sales force is incentivized to product, you're actually going to sell much more product. And we've already done this with a couple of large distributors, especially in the US, and we're continuing to do that through the remainder of this year. We brought in, as I mentioned, novel tests in the areas of limited competition, like GA. We're also working on a reagent format that is a plug and play for different instruments out there, so making it easier for the user. We see geographic expansion in Latin America, especially for ClinChem, and in APAC. And with group purchasing contracts, we're working quite closely with these GPOs and basically bringing the core of our products into those contracts. So very large contracts that we'll be working on. If we move to life sciences then, this is one of the major areas where you're going to see growth. And this is one of the major areas which we've invested heavily in. So why have we done that? What are the business drivers? So it's really demand for precision fermentation technology and services. What this is to do with the control and expertise that we bring to fermentation. And there's a huge demand for this in the US. There's basically a lack of capacity out there. There's also need for downstream expertise. So not only performing the fermentation, but the centrifuging, the purification downline of the fermentation, and also adding value by potentially bringing in new technologies in downstream processing, such as spray drying, to add a more wing-to-wing, basically offering to our enzyme service. We're going to be leveraging the requirements that for GMP, our sites are FDA certified, and we have ISO 13485 quality systems. One of the important business drivers in life sciences is the design-in business model. When we're working with these customers, we're not only their contract manufacturer, but we're their long-term partner. And contracts you will see for life sciences will be 5 to 10 years as the customer builds up, the commercial products. We've been building these with a relationship with Eppendorf and with ABEC. And I'll show you on the next slide the progress we've made in this. But we've taken partners that are very well known in the industry. And with Eppendorf, they're producing the smaller fermenters for us. And we've already had those delivered, and they're on site this week, actually installing them and validating the fermenter. So moving really quickly on the life sciences business. Performance, H1 revenues at 96% versus 2021. That's really driven by our existing customer base, especially, which is a good indicator of the growth that we're going to see in this area. We are building a new customer base now for this new facility. So we knew there was demand there, and we're already building a customer base, especially in the food area. So the demand for food enzymes, for health food products, for food additives like antimicrobial food additives. We're seeing traction in molecular enzymes, in CRISPR and PCR enzymes, and in other industry applications. So capacity expansion then on track to complete by the end of 2022. And then we'll see then the ramp up and scale up in revenues from 2023 onwards. So the growth prospects then really leveraging existing strong relationships that we have with customers. We're working with companies already by contract manufacturing their kits. And because we contract manufacturing their kits and they know that we have enzyme manufacturing capabilities, we've been asked to manufacture the enzymes, the molecular enzymes also. And for a molecular assay, the most expensive component in that assay is the enzyme. So we're going to work on enzymes not only for third parties, but we are thinking of bringing in an EKF brand of enzymes as well. We've invested in a business development. We brought in somebody just to look at building our business in life sciences and contract manufacturing. And we will be investing in other new technologies in downstream processing. As I mentioned, spray drying. For the food industry, they really want not only the enzyme production, but the purification, but really the production of a powder so that they can use that to add to their products moving forward. We have 3 very large privately held family businesses that are moving forward with us, and they all want our 14,500 litre fermenter. So, this is really, really encouraging that we've already got the customer base that we need to utilize the majority of the capacity moving forward into next year and the year after. So just to bring the business to life for you, to explain a little bit more about enzymes and about fermentation. So what is the life science investment? So basically we took a 25,000 square foot facility from Pfizer. It was their US distribution warehouse. And we are installing a range of fermenters from 65 litres to 14,500 litres. Our existing facility that we have in Elkhart has a maximum fermentation capability of 1,600 litres. So that you can see with a 14,500 litre fermenter, that's nearly 10 times the fermentation capacity for one fermenter. If you look at the top left, you can see this is actually our new life science facility in South Bend, Indiana. And on the right of that, you can see where we've actually been prepping the building to take in new fermenters. In the middle are actually the 1,500 litre and 3,000 litre fermenters that have been delivered. And as I said, actually been installed this week. And on the bottom left, you can see a picture of one of our guys hugging a 3,000 litre fermenter. And you just got to love the passion in the organization and the passion of the people that we have in life sciences. This gentleman is Cesar. He's our operations manager. He's been with the company over 20 years, and he is so happy to be having investment in life sciences and having, you know, the next state-of-the-art technology in fermentation. And on the right-hand side, you can see the where the guys went for the acceptance testing for the fermenters. So that just sort of brings it a bit to life. You can see what a fermenter looks like. You can see what we're doing in the facility and the range of fermenters that we're putting in. So if we go to lab testing, so this is another area where we feel there's going to be tremendous growth. So our value add really in lab testing is the quick turnaround from sample to result. As I mentioned, especially in the US at the moment, you would go to a clinic or a hospital, you would provide a blood sample, it would be sent off to LabCorp request, and you may get the result back in 8 days, 10 days, 12 days. Our value add is we're going to turn that sample around in 24 hours, sample to result. And in NIPT testing, which I'll go on to in a second, we're looking at a 48-hour turnaround. What's very attractive to private hospital networks at the moment is not only laboratory testing, but the range of services that EKF can bring to them. So we're bundling our ability of our range of point-of-care instruments plus our laboratory testing. And that's a real value add to just laboratory testing on its own. We're working with a large maternity hospital in Arizona, where we're not just going to be providing testing services, we're actually going to put instrumentation in their new lab and get people trained on it and build up a range of tests for that new facility. And work with them on a profit share after cost on those different tests. With ADL, what was really attractive as well, and you can see a picture on the right-hand side in the middle there, we've got a really highly experienced and technically qualified staff. And these guys have got years of experience in lab testing. They used to work in toxicology labs beforehand. And we're in an ideal position to pivot from COVID to non-COVID testing. We announced recently our strategic partnership with Yourgene. This is for non-invasive parental testing in the US. Hopefully we'll be one of the first labs to bring this test live in the US. And some of the future tests that we want to do are based on next-gen sequencing. So we don't want to be this mean-to lab. We really want to be leading the pack as regards to new tests coming on. Give you an example, there's a company in the West Coast in California that's developing next-gen sequencing infectious disease testing. We want to be the first lab in the US to bring that on board. We've brought in NGS testing for NIPT. We want to bring in NGS testing for oncology. And we're looking at pre-diabetes testing as well. So performance, H1, 2.1 million. Obviously, you can't compare that to last year because they weren't on board with EKF at that time. Transition from COVID to non-COVID is going well. We have toxicology, medication monitoring online. We have respiratory pathogen panel online now. We have cannabinoid testing online. And this month, we're going to be bringing on NIPT testing and UTI testing. So real good momentum and pivoting from COVID to non-COVID, really good growth prospects for the lab testing business as we move forward. Okay, let's move to contract manufacturing then. So obviously we grew a very large contract manufacturing business during COVID. And this was really basic contract manufacturing. This was putting tubes and swabs in a bag. Anybody could do it, but you know, we felt good that we basically supported the testing efforts globally during the COVID pandemic. We did generate a lot of cash from this business, which we invested back into the business. But moving forward, we will be pivoting away from this very simple contract manufacturing model into working more on highly complex kits in the genomics and forensic space. And there's a huge demand for kit in that space, in that genomic space. And we will be offering a total wing-to-wing contract manufacturing service. What does that mean? That means that we will be providing a service from everything from sourcing of the raw materials to shipping and everything in between. What's attractive to customers is that we're a very agile business. We are moving rapidly with them. And as regards to global reach, we have manufacturing sites in the US where we do contract manufacturing. We opened that manufacturing facility in the UK, which is now doing non-COVID manufacturing. And we do have a facility in Barleben with contract manufacturing capabilities, which we will leverage in the short term, in the near term. So H1 revenues then were down from 2021. Obviously, that's COVID coming offline. We did have a strong Q1 in contract manufacturing. There was a rollover of COVID business there, and that dropped off then as we went into Q2. What we did when COVID dropped off was we immediately restructured and removed the cost base. We had a lot of staff, almost 200 globally, that were temporary staff that we had to bring on related to COVID manufacturing, and quickly removed that cost base as COVID died off. So the growth prospects are then really leveraging our expertise and our capabilities. We have ISO 7 class 10,000 clean rooms, which you need when you're handling RNA and DNA-based products. Our sites are ISO 13485 2016, and we have FDA registered sites. We've invested in the business through business development, which I mentioned earlier. We are investing in potentially additional services in contract manufacturing, especially in the UK. We're looking to expand into lyophilization, freeze drying capabilities as well, that service. And we are going to be launching a global marketing campaign to build the awareness that EKF is now a global contract manufacturer. So just finishing off then, the outlook. So, we do have a solid core and established point of care and central laboratory business, which is growing. We have a resilient and diversified business and product stream, revenue stream. Life sciences is on plan, and that's going to deliver significant revenue in 2023 and beyond. And we are transitioning from COVID to non-COVID in contract manufacturing and lab testing to generate sustainable income moving forward. As regards to investment, the investment in life sciences is on track. We're investing in point of care. We're investing in a new facility in Germany to increase capacity there on our lactate products. We have a global-wide integration project supporting global efficiencies in IT and other areas. And again, all these expansion and growth plans are fully funded with internal cash. So finishing off then, growth. Good organic growth we're going to see from point of care, central lab and life sciences, leveraging existing routes to market and relationships, the expansion of the CLIA certified lab offering non-COVID capabilities, and then pivoting our contract manufacturing skills and relationships to non-COVID business. So in summary, we're on track to deliver adjusted EBITDA results in line with expectations for 2022. So Mark, this concludes our presentation. I'm happy to take any questions.
That's really kind of you, Mike, and to Mark and Mike, thank you very much for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab just on the right-hand corner of your screen. But just while Mike and Mark take a few moments to review those questions you've submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. Now, you'll probably see that you've received a number of questions from investors throughout today's presentation, and maybe, Mark, if I may, just hand back to you in the first instance, and if I could ask you to read out the questions and give a response where it's appropriate to do so, that'd be fantastic.
Turn your sound off, it's repeating. Yeah. Thank you, Mark. So I will pick up the first question to allow Mike a bit of time to go through some that have come through on the poll. So I'm going to answer a question from Morgan B. So, hi, why did administrative expenses as a percentage of revenue increase from 18% to 39%? That's a good question. So if I explain the delta from 2021 to 2022, which is 7.5 million, the vast majority of that difference comes from one-offs. So one-offs that occurred in 21, but also within 22. In 21, there was a 1.9 million credit in relation to share-based payments that artificially reduced the admin expenses in 21. In 22, there was 1.7 million relating to transition and restructuring costs that I referred to earlier in my financial update, with further details of those being in the appendix of the presentation. And for the purpose of adjusted EBITDA, those were treated as exceptional. There was also a further 1.2 million relating to the accounting treatment of the US inventory payment that I also referred to earlier, and further detail of that is available in the back of the presentation. So those are the one-offs that account for most of the change. We have also had an increase in admin costs this year. You will remember as a result of the acquisition of ADL that occurred in October. So it's not a complete like for like. We have a new business unit which contributed around 0.6 million of additional admin expenses in the first half of the year. So I hope that answers your question.
Thanks, Mark. I'm going to pick up a question from Sam M. A great question here around the 5-point strategy statement that we made a year ago, where there was no mention this time of acquisitions, a Mount Sinai partnership, or paying a dividend. Let's take the last one first. So we did announce this morning the timing of paying a dividend. So that will happen at the end of the year. As regards to acquisitions, so at the moment, I think the focus, Sam, is delivering on the strategy that we have at present. We've got to deliver on life sciences. We've got to deliver on lab testing. We really don't want to be distracted by an acquisition at this stage, but if the right one was to come along, we would have a look at it. But it's really, Sam, focusing on our strategy as is at the moment and delivering on it. I think we've got enough going on to focus on. And then the Mount Sinai partnership, we probably won't be doing anything with Mount Sinai for the next 1 to 2 years, unless something interesting was coming along. The marketplace it just isn't set up at the moment to do any of the sort of deals that we've done before with Renalytics, Trellis and Verici. So we are keeping the Mount Sinai partnership going. We have regular discussions with them, but we're not going to be focused on that moving forward.
Thank you, Mike. I'm now going to pick up a question from Murray J. And if you see it, Mike, I'm going to pick up point 1 and 2. And if I can give you a bit of time to form an answer for number 3. You got that?
Where is that?
You can see it on my screen if you want. So the question, I'll do them in turn. So the first question, how do you expect margins to change with the change in revenue mix in 23-24? So clearly one of the large areas of increases within life sciences. We are expecting that the additional benefit from further revenues in life science will be overall gross margin enhancing to the business. I won't be able to give you a figure at this point because we are still going through various commercial conversations. And clearly the margin that we'll make will depend on the industry application and also the services being provided. But in general, we are believing that the strong and positive gross margins that we see in some of our growth areas being life sciences and lab testing will be overall enhancing to the gross margin position. The second question is, I assume you don't have any US dollar debt. So with 50% of revenue in US dollar, are you tempted to hedge while the pound is so weak? Another good question. Historically, the rate is very low at the moment and we are benefiting. As a business, we benefit from a natural hedge within our currencies where we match off the revenue that is received with the cost base that is also in that currency. So from a cash flow performance, we don't have the pressure to hedge. Clearly, from a translation point of view, from a financial reporting point of view, it would be beneficial to lock in the prices. Clearly, any opportunity to hedge will come at a cost as well. So it is a strategy that will be explored. But as I said, because of the natural hedge that we have in the business, it is maybe not as key a consideration as it otherwise would be. Mike, would you like to pick the third question there?
All right. So how large could the NIPT market be for EKF, bearing in mind the large players already offering this service? Another great question, Murray. I'm not sure, Murray, if you follow Yourgene at all. And I'm sure Lynn from Yourgene has given a presentation on market sizes, etc. Let's talk about what we are doing in NIPT and the traction we're having. So there are some big players there. There's PerkinElmer, but that's not based on NGS. That's not based on that technology. It's not as precise and accurate, should we say, as Yourgene's technology. The other big player really is Natera. Natera in the US does have NGS based technology. Where we are seeing traction is through the relationships that we already have with not only reference labs, but with hospitals. So we've already signed our first contract with a large reference lab to do their NIPT testing for them. And that was really due to the quick turnaround that we're going to be offering for this test as regards to the competition. And we are working with a large maternity hospital network in Arizona. And that's not only leveraging the NIPT test, but what other tests that we could bring to the market. So this large maternity hospital is not only looking at NIPT, but looking at sort of oncology testing as well, and a lot of other tests that EKF can bring to this table. So we're really, Murray, bundling NIPT testing with other potential tests that we're bringing on board. There is competition out there, but we've already seen that we can win in this business due to really the portfolio that EKF has to offer.
Okay.
Mike, so what is this?
Yeah, I'll pick up a question now, Mike, and then maybe you can answer that one that's on the screen. So a question from Mark A. Rather than share buybacks, would you look to accelerate your development through accretive acquisitions? As we've mentioned, it is a revised strategy of the board to focus our investment activities in the core organic growth within the business. We did a share buyback earlier on this year. There are no current plans to perform any further share buybacks at this time. As Mike said, in relation to M&A activity, it is not a specific focus at the moment, but we are often seeing opportunities come our way, and we have a senior team that are well placed to assess any opportunities. And clearly, if the right option was there for the business and it fitted within our strategic growth strategy, then we would consider it. And with the cash balance that we have, we are also in the fortunate position of being well funded to move very quickly on acquisitions as and when they come our way.
Thanks, Mark. I'm going to take a question from Steve K. And the question was, what visibility do you have of new business from customers in the life science business? You seem very confident for this segment of the business. So we knew, Steve, that there was huge demand for the fermentation capacity that we brought on board. And this was really due to this was customer driven, basically. What we have been very successful in doing in the last couple of months is engaging very, very large, privately held, family-owned businesses in the US that want that need this new fermentation capability. And two large customers in the food industry, so looking for products for food, for health, and fitness products, looking for antimicrobial additives for food. So a lot of traction in the food business, a lot of traction for industrial enzymes, and obviously a lot of traction as well in the molecular business. COVID really put PCR on the map, especially, and the demand for enzymes for PCR is increasing. But also we're working with companies in the next-gen sequencing space, especially with CRISPR. And we're going to be looking at manufacturing CRISPR enzymes as well moving forward. So yes, Steve, pretty confident in this area at the moment. And that's only because of the customer base that we've already built. So looking for good growth moving forward.
Okay, so I'll pick up a question from Andrew R. And I think this has been partly covered off in a previous answer that Mike gave, but I'll just go into a bit more detail. So the question is, do you intend to carry on with the in-specie dividends for your spin-out companies, most recently Verici? My concern is that these are early stage, cash-hungry businesses, and so the risk to shareholders of future dilution is material. So we currently have no plans to do any further spin-outs and dividends in specie back to shareholders. Again, that will be continually reviewed, subject to market conditions, which we don't have control over. So no plans at the moment. And as you're aware, the recent dividends in specie have reduced the external holdings that we have on the balance sheet currently.
Mark, do I have time for another one question?
You do, sir. Please do. Please do.
All right. Okay. It's a question from Andrew R. here. And the question is, are you able to expand on the level of demand from customers for your fermentation services? Specifically, how large are the projected contracts and are they one-offs or long-term commitments? The great thing, Andrew, about this business is it's totally designed in. So there's a lot of tech transfer and a lot of technology in bringing these products to commercial scale. And that's basically the value that we bring to the customers. So when a customer works with us, they're definitely not going to be one-offs. There's a huge commitment on both sides here. And our technical teams work very, very closely together. So these are really long-term projects, maybe commitments, maybe 5 to 10 years. How large are they? Really depending on the product itself and the project itself. But I would say long-term, very large contracts, especially if they're going to utilize our large-scale fermenter. So really designing model here, Andrew.
Okay, and if I pick up the final question that's just come through from John S., which is, will the life science business continue to be profitable in spite of the investment in the new fermentation capacity? So hopefully I understand that question. The investment is in a different site, in the South Bend site. The revenue that we're currently generating is within our existing Elkhart site. So given the separation, there's not going to be any disruption on our Elkhart activity, which is currently very profitable. In terms of the investment that we're making, this is capital expenditure. So that will go onto the balance sheet and will not impact upon the profitability. So very confident that when we bring the life science new development online, it will be a profitable part of the business going forward.
That's great. Mark, Mike, thank you very much. You've pretty much taken all the questions you can from investors this afternoon. If any further questions do come through, we'll make those available for your review after today's meeting. I wondered if I may, Mike, knowing that investor feedback is important to both you and to Mark and the company, before I redirect investors to give you their thoughts and expectations, I wondered if I may just ask you for a few closing comments.
Yeah, sure. Thanks, Mark. So really strong first half results in line with market expectations. Core business growing nicely and strategy for life science, contract manufacturing, lab testing progressing well. So we're really looking forward to continued growth for the remainder of this year and into 2023.
That's great. Mike, Mark, thank you once again for updating investors this afternoon. Could I please ask investors on the call not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This may take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of EKF Diagnostic Holdings PLC, we'd like to thank you for attending today's presentation. Good afternoon to you all.